You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. However, this week we are joined by K-State grain economist Dan O'Brien and the senior economist with the International Grain Program, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you.
Thank you, Shelby.
Last week, this WASDE report did come out, and so wanting to talk about it today on the international and domestic side. And first, talking about the commodity of wheat.
The wheat supply demand balance sheet for the United States, the domestic balance sheet did have a minor change. The USDA did raise the wheat export number by 25 million bushels. It had been at like a 50-year low at 700 million bushels, but we did come in and see some changes. I believe soft red winter wheat probably the main beneficiary of that, and we've seen some sales of late in that, so that was positive. Still, you're looking at a ending stocks number because the exports were raised. That was shaved down by that same 25 million down to 659 million bushels, and the stocks to use numbers were now adjusted down to 35%. Of course, that compares to 2 years ago at about 37% and last year at about 31%. So we're somewhere in the middle on the high side, if nothing else. The domestic issue right now that people are thinking about probably is how the winter wheat crop that's been seeded here in the United States will hold up, and we're receiving moisture in western Kansas, so that's a positive. So we don't have a lot of other changes on the domestic side. Really, we've just been I think a polite word is languishing export wise, and that's due to international competition, currency issues coming into play, and on the overall international numbers that there were for world wheat production. Australian wheat was raised for the 23-24 marketing year about 1 million metric tons. Canada raised 1 million metric tons as well. So not a lot of change there. Guy, do you want to have any comments on the world wheat market that you see?
Yeah, they did raise some individual estimates, but year on year, world wheat production will be about 783 million metric tons, which is actually off about 6 million metric tons from a previous year. But it was up slightly from last month's November's estimates on that. However, consumption is expected to be up. It's up about 7 million metric tons, about 635 million metric tons. So you would sort of expect that to be a bit bullish with supplies down and demand up. But exports are off. Exports are off probably 13 million metric tons. And I think that's reflective of there's a lot of wheat in the smaller producing countries around the world. I also think with the higher relative prices of wheat internationally, we're starting to see those higher prices ration some demand on that. And ending stocks were down there as well as demand was up a bit. Ending stock still pretty comfortable at 258 million metric tons on that. But it's I guess nothing new on that. We're sort of experiencing that in the U.S. being the residual store of commodities. Our exports have just been exceptionally slow.
And what are we seeing on?
And if I can add in on that, the stocks to use number again. Yes, we have the world ending stocks for wheat at 258 million. If you take wheat, the world minus China, you're down at 194. That 194 is the lowest and continues to move lower year by year, the lowest since 2007, 2008. So I know maybe it's a contrary opinion, but I think the world very, very focused on wheat that's being pushed out the door out of the Black Sea, two primary Black Sea region countries, and their currencies are cheaper than United States, and we're just to me, I understand why we're doing what we're doing right now in the wheat market, but we're really vulnerable, I think, to any type of shortfall that would happen either because of weather or geopolitical issues coming out of the Black Sea region, and It just we're comfortable being tightened down, and you're tightening that spring to where somewhere out there a shortfall would cause a significant market reaction to the high side. What are your thoughts, Guy?
Yeah, we're running things pretty tight, not only in wheat, but particularly across the board, specifically in soybeans and even historically in corn. And I remain a bit optimistic we're going to see some of that demand start to come to town a little later than usual. But look, just in the last 10 days, we've seen China come in and buy nearly 2 million tons of soft red winter wheat. Bit disappointed they weren't buying hard red winter wheat, but China's cheapest wheat buyers, and your soft red winter was pretty cheap. So that's a good signal, and I think they're going to come to the U.S. probably the last part of the year, since we're the residual store or supplier of those grains, and they're starting to come to town and buy. So it keeps me cautiously optimistic for wheat particularly, but across all those commodities.
So we just don't want to be so bearish, neither Guy or myself, that things couldn't turn around, because we're kind of setting up that way. But until wheat doesn't come out of those Black Sea countries, this is kind of where we're at.
Yeah.
And what are we seeing on the corn side of this?
The corn supply demand balance sheet domestically also had a bit of an increase in terms of exports, raised 25 million also there, up to 2.1 billion bushels, and out of total use of 14.49, ending stocks shaved down by that same amount to about 2.131 billion bushels. And again, the issue all along, the reason for our relative pessimism for corn prices when compared to where we had been in the last couple of years, is that that ending stocks number still projected to be well over 2 billion bushels. Stocks to use 14.7 percent stocks to use, and that compares to 9.2 and 9.9% the last 2 years. Prices 485 projected for this marketing year, again running from September of 23 to August of 24, and that's down from $6 and $6.54 the last 2 years. So that's basically where higher stocks following a 15.2 billion bushel crop in this year will come into play. I would say there's still the chance for that production number to change. We come January the 12th, we'll have the final U.S. crop production number. Although they say it's the final, it can still change out in the future if they discover they're off. But so there's the potential for volatility coming into the market around that set of January reports. And Guy, to kind of give a springboard off into your side on the international side, that we still have a lot of uncertainty about Brazilian corn production. Again, problems they've had on the soybean crop, and dry weather that's hit some of those up and down weather. You have some good forecasts, some poor, have the potential to impact that second crop, safrinha crop for Brazil, and that would change a lot of things.
Yeah. Look, on the global side of things, we've seen record world corn production this year at 1,220 million metric tons. That's a record production. A big driver of that is Brazil, as you said. They continue to increase their corn acres, and they're expected this year to export just under 56 million metric tons compared to last year at just 45 million metric tons. And that's as they extend that export season down there in Brazil. We just haven't seen the volume of grain or buyers come into the market, particularly for corn, similar to wheat on that. That said, China now has emerged as the biggest wheat buyer as well as the corn buyer, and we've seen them come in the market in the last few days there as well. Looking on down through the global supply-demand relationships, exports are up this year just under 200 million metric tons. That's up about 19 million tons from last year. So it's good to see that, and it's a bit of a sign of still strong livestock feed demand, and coming from still a fairly strong livestock sector there. That said, our ending stocks are up. They're up a bit about 15 million metric tons from a year ago, a bit more comfortable. And I think that helps to explain why we just haven't seen corn as strong as we would like to have. We're just getting, even though it's tight, we're a bit more comfortable, and that's the way we're moving. So everybody's relaxed a bit and doesn't feel that sense of urgency.
And if I could add in on corn, we've received reports in the last few days of tightening ethanol stocks here in the United States. Ethanol, well, not just ethanol, but biodiesel policies down in Brazil being discussed. If anything, expanding. So I think anymore we have livestock feeding, we have crush, and coming out of crush for soybeans, we're seeing more of an energy component to the oilseed sector to match, to at least match what we've seen in terms of ethanol development in the United States. So as a guy, as you and I go forward, and Shelby, as we talk about this stuff, I think all that much more, it behooves us to really be aware of these ongoing trends, and actually some of the international policies on the bioenergy side. Any thoughts, Guy?
Yeah, look, we've seen ethanol prices come down and their margins narrow up they were quite healthy last month when we were discussing this, Dan. The margins come down, but they're still positive on that.
Still
that's
positive.
Sort of following crude oil prices have come down to below $70 a barrel in the last few weeks, which is sort of driving that. Just a report out this week from the IEA indicating that demand for oil has actually dropped off, particularly in this last quarter of the year. And that's being reflected in gasoline prices at the pump as well as crude oil prices. And that flows through to that ethanol market.
If since we're talking feed grains, can I mention something real quickly on grain sorghum? This last week we had a strong ethanol market, ethanol export run, got up to, see if I can make sure I have this in front of me and I'm doing it right. Saw grain sorghum exports in the U.S. jump up to like 13.4 million bushels. And they a lot of times they'll hop around 2-3 million bushels in any one year in terms of actual shipments. But then they'll kind of aggregate sales, and in one week jump to 10, jump to 12. Well, this 13.4, tremendous run. So Guy, a lot of that's going straight to China, and I know you have a China background from your work overseas, and that's going into some domestic beverage markets, isn't it?
Yes, that even though our world production of sorghum is up by about 4.5 million metric tons internationally, we've seen exports up about 2 million metric tons, and up U.S. exports of sorghum are twice what their forecast to be last year. And again, that's being driven by China into that Baijiu market. So that's probably the most bullish complex out there is the sorghum. Even though we've had a dry year in Kansas, it looks good for the coming year.
And we see it in the cash prices. Cash sorghum prices are generally have jumped above corn prices in so many markets. Go ahead, Shelby. I'm sorry.
Nope, we're going to cut to a short break right now on Agriculture Today, but when we come back, we'll continue our conversation with Guy Allen and Dan O'Brien.
It's we kind of jab and move. It's like Ollie and Frazier in the deal. Oh, sorry.
Cut your recording, Dan.